Ladies and gentlemen, good day and welcome to Axis Bank conference call to discuss the bank's financial results for the quarter and year ended as on 31st March 2024. Participation in this conference call is by invitation only. Axis Bank reserves the right to block access to any person to whom an invitation has not been sent. Unauthorized dissemination of the content or the proceedings of the call is strictly prohibited, and prior explicit permission and written approval of Axis Bank is imperative. On behalf of Axis Bank, I once again welcome all the participants to the conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions at the end of the briefing session. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. On the call, we have with us Mr. Amitabh Chaudhry, MD and CEO, Mr. Rajiv Anand, Deputy Managing Director, and Mr. Puneet Sharma, CFO. I now hand the conference over to Mr. Amitabh Chaudhry, MD and CEO. Thank you, and over to you, sir.
Thank you, Nirav. As you mentioned, we have on the call Rajiv, Subrat, Manish, and other members of the leadership team. We have had another strong year of performance built on our GPS strategy that has set Axis Bank firmly on the path to become a resilient, all-weather franchise. We have delivered our aspirational return ratios with better quality and consistency of earnings while maintaining a strong balance sheet position. During the year, we maintained the growth trajectory across our focus business segments, including MSME, Bharat and retail assets, and improved the quality of our deposit franchise. We also scaled up the branch network as we crossed the milestone of 5,000 branches and opened a record 475 branches in financial year 24. We also improved our Net Promoter Score (NPS) ranking to second among large peer banks as per benchmarking study undertaken by independent agency Cantor for Axis Bank. Our flagship Day-2 properties, Open and Neo, continue to lead the market in retail and wholesale segments. Our current position of strength is a result of consistent execution rigor and investments made in building blocks across our people, processes, technology, and several multiplicative projects over the past 5 years. This has helped us to not only surpass the GPS commitments we had made, but also deliver distinctiveness and differentiation across our focus business segments as we continue to build new sources of competitive advantage. In Q4 financial 24, the bank delivered consolidated ROE of 20.87% and has now delivered ROEs of greater than 18% for the past 7 quarters. The bank is well capitalized with organic net accretion of 44 basis points of CET1 capital in financial year 24. We stay focused on 3 core areas of execution of our GPS strategy, namely becoming a resilient all-weather franchise, creating multiplicative forces to build competitive advantage, and building for the future. I'll now discuss each of these areas. As far as becoming a resilient all-weather franchise is concerned, I will talk about deposits first. Over the last couple of years, we have in deliberate planned steps shifted the quality and strength of our deposit franchise in a marked manner. We have shared the trend on growth of granular deposits, reduction in LCR outflow rates, premiumization through Burgundy and Burgundy Private platforms, and embedding of Siddhi, our employee super app, and Sparsh, our customer experience transformation program, into the DNA of the branches. These initiatives have improved the health of our franchise significantly, and the impact of this was seen progressively every quarter in financial year 24 in our deposits market performance. We are carrying this momentum into financial year 25. We continue to drive higher growth in LCR accretive retail and small business deposits that stood at 18% year-on-year, 500 basis points higher than our overall deposit growth. We have improved our LCR outflow rates by 500 basis points in the last 2 years, which is among the best in the sector today. CASA deposits grew 8% quarter-on-quarter, and our CASA ratio as percentage of average assets for Q4 financial 24 stood at 32%, which is among the best in the sector today. We have further improved the growth trajectory of retail term deposits with 17% year-on-year growth that stood at 13-quarter high. On the corporate salary side, we have redesigned our corporate salary product proposition under Suvidha to win employer mindshare and get higher employee wallet share. Our premiumization strategy continues to perform exceedingly well, with Burgundy business growing at a CAGR of 32% in 5 years. On the wholesale segment, Project Neo is helping to drive higher transaction banking flows leading to better current account balances. Our NEFT market share in terms of value has increased to 12% in quarter 4 financial 24 as compared to 9 in quarter 4 financial year 23. Our deposit mobilization strategy has been led by two large transformation initiatives, Siddhi, a super app for our employees, and Project Triumph, leveraging the various business segments within retail, Bharat, and SME continues to progress well. All-round growth across businesses, market-leading growth in our focus segments. Refer to slide 8 of the investor presentation. Our higher-yielding focus segments, including SME, mid-corporate, SBB, rural, personal loan, credit cards, together have grown at a CAGR of 25% in the last 4 years and now constitute 43% of the total advances, up by 1,210 basis points during this period. We will continue to focus on driving growth across our business segments while following capital efficient ROC model. As far as strengthening the core is concerned, while we have strengthened the balance sheet and capital position significantly, we have also been consistently building and investing in the entire technology backbone, data analytics, digital and tech teams. We have early leadership in microservices-based cloud adoption and the first Indian bank to be ISO certified for its AWS and Azure cloud security. As part of our commitment to open API ecosystem, we now offer wide stack of 410 plus APIs on the developer portal. Our investment in emerging tech is demonstrated through creation of almost 3,500 RPA bots and leveraging Microsoft Gen AI use cases focused on conversational banking, automation, and AI service enablement. Our second pillar of strategy has been creating multiplicative forces to build competitive advantage. Our readiness to partner with innovative fintech ventures has created a dynamic ecosystem that fosters innovation, enhances the customer experience, and sets new industry standards globally. We believe we are well placed to play all the socio-economic mega trends of the next decade and beyond. The multiplicative forces that we have built through unification of One Access, 100 plus partnerships, and new age tech platforms give us the right to win. Slides 13 to 16 provide more details. Citibank consumer business integration remains on track. Deposits are largely stable while there has been strong growth in retail assets and wealth management led by improvement in cross-sell metrics. We are now live with the first change in the migration journey for the transitioning customer base with IFC migration, enabling payments to Citibank accounts using Axis Bank IFC. This has been made live in March 24. We have successfully completed the migration of the CVC loans portfolio in March 24, and the customers are now fully migrated from Citi systems onto Axis systems. The integration of the other assets and liabilities remain on track. The third pillar, building for the future. We have tried to be ahead of the curve towards building a bank for the future with deep investment of management time and resources in our chosen areas of distinctiveness, namely digital, Bharat banking, and customer obsession. Digital banking performance continues to remain strong. Opened by Axis Bank balance sheet continues to deliver strong growth with 33% increase in deposits and 74% increase in loans. Opened by Axis continues to be the highest rated mobile banking app on the Google Play Store with 4.8 rating. On the iOS App Store too, the rating has increased to 4.8 this quarter. Neo for Business, our MSME proposition, now has 60,000 customers onboarded over the last 2 quarters. Neo for Corporates is being scaled up with customer migration currently underway. The migration here will continue to scale up till quarter 3 while we continue to launch additional capabilities. With the rollout of Neo, Axis remains on track to become the operational bank of choice of our wholesale banking clients. Bank-wide programs to build distinctiveness. Our bet on Bharat is growing from strength to strength. The financial year 24 disbursements sold by Bharat Banking are up 30% year on year. Rural advances are up 30%. Deposits from Bharat branches are up 12%, thereby aiding the PSL and profitability metrics. We have expanded our multi-product distribution architecture to 2,482 branches, complemented by 64,550 CSC really network across 683 districts and 80 plus partners across the industry. Sparsh, our customer obsession program, is helping improve relationship and transaction intensity with our customers. Sparsh is now embedded in rituals and practices across all our branches, all our customer touchpoints, and in the conduct of every employee. Our Gen AI conversational chatbot is empowering frontline employees to efficiently address queries on core products. In closing, the Indian economy continues to remain a bright spot with its favorable macros backed by a strong and stable domestic policy environment, which bodes well for the banking sector. We will continue to be differentiated and distinctive in our journey to improve our service and performance level for all our stakeholders. We remain focused towards building an all-weather institution that will stand the test of time. I'll now request Puneet to take over.
Thank you, Amitabh. The FY24 PAT stood at rupees 24,861 crores, up 160% YOY. Net interest margin for FY24 was 4.07%, up 5 basis points year-on-year. Consolidated ROA at 1.84%, up 99 basis points YOY. Consolidated ROE at 19.29%, up 10.03% on a YOY basis. Our operating performance has been robust. Q4 FY24 net interest income grew 11% YOY and 4% on a sequential quarter basis. Q4 net interest margin was 4.06%, up 5 basis points quarter-on-quarter. Q4 FY24 fee income grew 23% YOY and 9% Q-on-Q. Retail fees grew 33% YOY, 12% Q-on-Q. Granular fees account for 93% of our total fees. Q4 FY24 operating revenue was up 20% YOY, 10% sequential quarter. Operating profit grew 15% YOY and 15% Q-on-Q. PAT stood at 7,130 crores, up 17% on a sequential quarter basis. YOY is not comparable to previous year. Q4 FY24 consolidated ROA and ROE on an annualized basis is 2.07% and 20.87%, up 23 basis points and 226 basis points Q-on-Q. Our subsidiaries contributed 7 basis points to the consolidated ROA and 52 basis points to the consolidated ROE. Net interest income grew 16% YOY for FY24 on a full year basis. Fee income grew 28% YOY on a full year basis. Operating profit grew 16% YOY on a full year basis. Our healthy business growth was delivered across all segments. Bank's total business grew 13% year-on-year and 5% sequential quarter. Advances grew 14% year-on-year, 4% sequential quarter. And our month-end deposits grew 13% year-on-year, 6% sequential quarter. On a month-end balance basis, our retail term deposits grew 17% year-on-year and 5% sequential quarter. CASA grew 8% on a Q-on-Q basis, with the CASA ratio of 43% as of 31st March 2024. On a quarterly average balance basis, our retail term deposits grew 16% YOY, 3% sequential quarter. Total deposits grew 16% YOY, 5% on a sequential quarter basis. Our average LCR during Q4 FY24 was 120%. Our outflow rates improved by 500 basis points over the last 2 years. Advances gross of IBPC sold grew 15% year-on-year, 4% quarter-on-quarter. Within advances, retail loans grew 20% year-on-year, 7% quarter-on-quarter. SME loans grew 17% year-on-year, 5% quarter-on-quarter. Corporate loans gross of IBPC sold grew 7% year-on-year. Small business banking loans grew 33% year-on-year, 7% sequential quarter. Our mid-corporate book grew 22% year-on-year. Small business banking, SME plus mid-corporates now aggregate on a total basis to 2,08,338 crores of book, constituting 22% of loans. This is up 628 basis points in the last 3 years. We are well capitalized with a self-sustaining capital structure and adequate liquidity buffers. Overall capital adequacy ratio stood at 16.63% with a CET1 ratio of 13.74%. Net organic CET1 accretion of 44 basis points in FY24 and 3 basis points in Q4 FY24. 5,012 crores of COVID provisions have been reclassified to other provisions. These are not considered for capital adequacy computation and provide a 41 basis point cushion over our reported capital adequacy ratio. Our excess SLR was 85,056 crores. Our average LCR for the period was 120. We continue to maintain strong position in payments and digital banking. Axis Mobile and Axis Pay have 11 million non-Axis Bank customers, 100 plus digital partnerships across platforms and ecosystems, 20 million customers on WhatsApp banking. Cards in force market share at 14%. Retail card spends grew 51% YOY. Our asset quality has improved and is amongst the best in class today. GNPA at 1.43% declined 59 basis points YOY and 15 basis points Q1Q. Net NPA at 0.31% declined 8 basis points YOY and 5 basis points Q1Q. GNPA and NNPA in rupee crore terms have both declined sequentially. PCR is healthy at 78%. On an aggregated basis, our coverage ratio stands at 159%. Gross slippage ratio at 1.48% declined 28 basis points YOY and 14 basis points sequentially. Our net slippage ratio is 0.57%. Q4 FY24 net credit cost was at 0.32%. FY24 net credit cost is 0.37%, declined 3 basis points YOY. Our key subsidiaries continue to deliver steady performance. FY24 PAT at 1,591 crores, up 22% YOY, with a return on investment of 54% on our domestic subsidiaries. Axis Finance FY24 PAT grew 28% YOY to 610 crores. Asset quality metrics improved. ROE of 16.77%. Axis AMC FY24 PAT at 414 crores. Axis Securities FY24 PAT grew 48% YOY to 301 crores. Axis Capital PAT stood at 150 crores and executed 90 investment banking deals in FY24. With this, we conclude our comments. We'd be happy to take questions. Thank you.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. An operator will take your name and announce a turn in the question queue. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Jeanette Parmar from Money Control. Please go ahead.
Audible?
Yes.
Right. So my first question is basically on your exposure to AIF. So you had done some provisions in the last quarter. So just wanted to get a sense on after RBI direction last month, have you done any write-backs on that particular provision?
No, we have not written back any provisions on AIF post the RBI clarification. We are prudently holding on to provisions on AIF investments, so they currently remain 100% provided for.
Okay. My second question is on the exit of Mr. Ravi Narayanan from the bank last month. So there were speculations that his exit was kind of surprising as such, considering his term in the bank. So just wanted to get a clarity, as in, so you in your exchange filing you had said it's for personal reasons and he wanted to do something else. But just wanted to get a clarity as to like what was it like other than personal reasons, because there was speculation. So any clarity on that?
So whatever we had to say on that announcement. If other people want to speculate, that's not our problem, right?
Sorry, but the audio is not coming clearly.
Yeah,
I think whatever was there, had to say was there in the announcement, yeah.
So your voice isn't clear. I'm sorry, but I couldn't hear you.
Whatever the bank had to say was there in the exchange disclosure. We have nothing else to add to that.
Okay, noted. Thank you. Sure, thanks.
Thank you. The next question is from the line of Siddhi Naik from Reuters. Please go ahead.
Hi, sir. This is Siddhi. Thanks for the question. I wanted some guidance on your loan and deposit growth. I guess in the last quarterly call, you had mentioned that eventually there'll be some kind of slowdown in loan growth, and deposit growth obviously will have to catch up to the loan growth. So I want to get some guidance. This is a new fiscal year. Any outlook that you would provide on the loan and deposit growth?
Firstly, can you hear me?
Yes, sir.
Okay. So we don't provide any guidance on loan or deposit growth, I think, but we continue to stick to our statement that based on whatever we are hearing and seeing in the marketplace, the deposit growth will remain a constraint, liquidity will remain tight, and as a result, if the deposit growth remains muted as what we have seen in the recent past, ultimately the loan growth will also reflect the same. And I think in this quarter, some of the announcements of the banks have come, and we can see that playing through in some of the bank results. So whatever we have said is turning out to be true. So I hope you will listen more to us going forward in the future.
Okay, sir, I'll come back.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Ben from the New Indian Express. Please go ahead.
You have given.
Ben, sorry to interrupt, your voice is not coming clearly. Can you please
Hello.
speak to the handset? Ben, may I request you to come in a better reception area? Your voice is breaking.
Can you hear me now?
Just slightly better.
Yeah. Can you give us the absolute numbers of NIM, net interest income, the balance sheet growth? Because barring the profit numbers, none of the absolute numbers are given in the exchange filing.
Thank you for the question. Actually, our press release carries all of the numbers that you requested for, but let me read them out to you. On a full year FY24 basis, sorry, am I audible?
Yeah.
Yeah, so I just wanted to clarify that thank you for your question. I just want to clarify that all of the numbers you've requested for are part of our exchange filing and also included in our press release, please. I'll just give them to you for ease of reference. Our net interest income.
Okay.
Our net interest income for the full year is 49,894 crores. Our net interest income for quarter 4 is 13,089 crores, growing 11% YOY and 4% quarter on quarter. Your second comment was on overall balance sheet size. I will guide you to look at page 8 of our press release. Our total balance sheet size as 31st March is 14,77,209 crores. For the same period last year, which is 31st March 2023, our balance sheet size was 13,17,326 crores, effectively representing that our balance sheet grew by 1,60,000 crores in the last fiscal.
Okay.
I hope that answers.
Yeah. And how has been the personal loan growth? One last question. Personal loan growth?
So effectively, if you look at the way our book has performed, on a personal loan growth basis, I was requested to look at slide 740 of our investor presentation. Our PL book grew 10% on a sequential quarter basis, stands at 71,592 crores and comprises 12% of our total retail asset loan book.
Okay. Okay, thank you.
Thank you. The next question is from the line of Manojit Saha from Business Standard. Please go ahead.
Yeah, hi, good evening. What is the reason for the sharp increase in provisions from 305 crore in the same period of previous year to 1185.31 crore in the Q4 FY24?
Thank you for your question. If you look at the breakup of provisions that we provide on slide 80 of our investor presentation, you will see that the increase is principally coming on loan loss provision, and the increase is backed up by improvement in our provision cover ratio. Asset quality remains good for us, which is reflected through gross slippages. Gross slippages are for us on a year-on-year basis has actually declined by 28 basis points, uh, giving you comfort that the book quality remains good.
So loan loss provisions, can you throw some light where the loan loss provisions have gone up? It's retail or SME or corporate loans?
So effectively, please do appreciate that loan loss provisions are across categories. Again, I will request you to look at slide 78 of our investor presentation. We provide you segmental disclosure on the NPA composition of our loan book. We do not provide breakup on segmental net credit cost as part of our reporting, but directionally, uh, wholesale and SME books typically would have held up well. The provisions would be largely for the retail portfolios. But again, please read the provisions in the context of slippages. Our slippages have improved sequential quarter and year on year, reflecting the fact that the book has healthy credit quality as we stand today.
So is this, you're saying slippages are in control, but provisions have gone up. So is it because of aging provision? Or there was
Yes,
there was no floating provision, right?
we do not, as a policy, make floating provisions. Please see the PCR number. Our PCR number now stands at a healthy 79%.
Essentially, it's aging provision, right?
It will be a mix of aging provision and composition of assets that have slipped. So it's not only aging provision, it's also a mix of assets. Any example, in our case, we provided very high rates for retail unsecured loans, but a mortgage loan was provided at a different rate. So if the composition of slippages changes, loan loss provisions will change. But please do appreciate asset quality is reflected through gross slippages and net NPA. Our net NPAs have improved year on year and sequentially, and our gross slippages have improved year on year and sequentially.
And what is the credit growth and deposit growth projection for for the current financial year?
We do not offer guidance on loan growth and deposit growth. As we answered a question previously asked to us, the only guidance we offer is medium term. Medium term for us is 3 to 5 years, and we believe that we will be a market share gaining franchise on a 3-5 year basis.
Okay, thank you.
Thank you. Next question is from the line of Shilpi Sinha from the Economic Times. Please go ahead.
Yeah, good evening, sir. So my question is again on CASA deposit, which you've been mentioning over the call for some time now. But again, just to get some views on, your deposit falling. The CASA deposit, if I look as a percentage of total deposit, has fallen from 47% to 43%. So if you can just give some idea as to what the bank is doing about it.
Yeah, Shilpi, so like Amitabh said, we have been on a transformation journey for our deposit franchise in a very deliberate and a planned manner over the last couple of years. If you look at the numbers, we have made structural shift in our type of deposits, our LCR ratios, our LCR accretive deposits, our growth has actually held up. Our deposit trajectory actually this quarter is on a 13-quarter high in terms of. And in terms of average or deposit as some average assets, we are amongst the best in the industry. So we are working on a number of things across the franchise, which include getting the entire bank to get us deposits, including businesses like asset businesses. Also, our transformation projects, which are Siddhi technology-led transformation project, and also the Triumph project, where we are trying to improve the operating rhythm in the branches. Apart from that, our distribution expansion last year has given us good growth, and we will continue to invest in that growth, in the time to come.
Okay. On the advances front, also, I wanted to understand if you can give some color on the kind of loan demand that you're seeing and where is it coming from. Your corporate loan has grown only 3% last year, if I read the numbers correctly. So if you can give some color as well.
So corporate loan demand continues to be fairly broad-based across various sectors. We ourselves have participated in a fair number of these transactions. And we do believe that, I mean, as I look at my pipeline, the pipeline for incremental demand on the corporate side, continues to be quite strong as well. I think the issue will at this point in time, given the way that the curve is shaped, where short-term rates are, like a 1 year deposit rate is closer to 7.5%, but the 10-year GSEC is, closer to 7.20, and add corporate spreads, etc. I think the shape of the curve will preclude us from participating in many of the transactions where potentially the customer is able to get better yields from, for example, the bond markets as opposed to the loan markets. From our perspective, we are able to serve the customer given the fact that we have market-leading capabilities on both on the debt capital market side as well as on loan origination. And so therefore, some of our incomes on the wholesale bank side may not necessarily come through NII, but will come through fee incomes as we continue to engage with corporate India across the capital structure that they have.
Shilpi, I'd just like to supplement what Rajiv said.
Okay.
A better way to look at corporate growth is grossing up for IBPC sold. So I think you referenced the 3% number. The number grossed up for IBPC sold is actually 7%. So that's the number we should work with.
Okay. Another thing is, the board has today approved raising of funds, the issue of debt instruments to the tune of 35,000 crores. So what is the plan here? By when do we see this fundraise happening, and in which mode?
Shilpi, thank you for the question. It's a recurring annual resolution which is enabling in nature. We had a similar resolution last year of an equivalent amount. This is purely enabling for the purposes of our business. It is not an outlook on the quantum of funds or the type of funds we are likely to raise.
Okay, thank you.
Thank you. Next question is from the line of Ashish Agase from Press Trust of India. Please go ahead.
Thank you so much. Hope I'm audible, sir. What was the CD ratio for this quarter, sir? And secondly, you mentioned that there would be deposit growth would be a constraint. So, what sort of play should we expect from Axis Bank on this? Would it be hiking of deposit rates? What sort of headroom there? And again, what will be the impact on NIMs because of this? What sort of outlook do you keep on NIMs?
So thank you for your questions. You were inaudible for parts of the question. We picked up two questions. One was on what our CD ratio as at 31st March was. And the second question was an outlook on NIMs. So please allow us to answer those two, and then if there's parts of your question we've missed, we'll request you to repeat them. The CD ratio as at 31st March was 90.31%. So that clarifies the data question. On NIM outlook, as we have consistently maintained, we do not offer NIM guidance on a sequential quarter basis or a year-on-year basis. Therefore, we don't really have a way to respond to that question. We remain true to the fact that our through cycle NIMs will be 3.80% structurally. We currently, on last reported quarter basis, have a 26 basis points cushion. Please also note that last year, full year to current year, we've improved our margins by 5 basis points. So 4.02 last year to 4.07 this year. That should indicate to you that we are focused on ensuring the right levels of NIM at the right levels of risk for the franchise. We don't offer an outlook, so therefore I would not be able to answer that question.
Okay, sir. So the missing part was only sort of on the deposit accretion side, uh, like, do you see, as there is a constraint on deposit growth, will there be more hikes in the offering both for Axis as well as for the system? And then I was linking it up to the NIM side, because if you were to hike deposit rates, what sort of impact do you see on NIMs going forward?
Association of deposit rate increases and margins, and that's now available in public domain. Our 12-month cost of deposits increase, which is the increase in the 12 months FY24 versus the 12 months FY23, is roughly about between 95 and 97 basis points. We've also had an increase in yield on interest earning assets by an equivalent number. So insofar as looking at cost of deposits and yields impacts, our performance for FY24 indicates that we've been able to pass on that cost of funds to our customers, either through change of mix or improvement in pricing, in some cases both. On the deposit question, we've had a healthy deposit growth on a sequential quarter basis in Q4. Our commentary on deposits has been, in the current liquidity constrained environment, deposits should continue to grow for us, is where I will pause that response.
Okay, sir. And sir, second quick question on the entire technology architecture side of things, actually. So, how difficult is it to maintain, and this can be a very broad question, that how difficult is it to maintain really the entire tech engine to keep it such that it keeps pace with the overall customer growth and other things for a bank your size? You also suffered some difficulties during the quarter recently on that front. So, how difficult is this, sir? Of course, we have seen quite a lot of action from the regulatory side as well on this.
Right, sorry, you were not very okay. You're not very audible here, but I think I got the gist of your question in terms of how are we architecting our technology landscape to manage both the increase in digital transactions, the resilience of the system to make sure that they don't go down, and also to manage information security and data security risk. Now, this is a constant kind of a work that we've been at for the last 3 to 4 years, and fundamentally this requires very strong and new gen technology architecture, which kind of separates the core banking system from the middleware, and then middleware from the front end systems where most of the transactions are happening, which we have done. The second part of this is also to be able to partition the core banking system in a manner where you are able to do the high velocity, low value transaction, which is the feature of India's digital stack, and we are able to take it to the cloud, which is also what we have done. So, from our perspective, there is a clear vision to be able to continue the kind of resilience that we have seen our information technology systems have. We've also, built the capacity for the infrastructure at fairly significant levels of slack within the system, so that we have that additional capacity when the volumes go up. Having said all of this, this is not an area that any one of us can be comfortable at any point in time. So the constant monitoring and constant, action on this is part of the everyday IT game at this point in time, and we continue to be extremely vigilant about it.
Okay, sir. Thank you.
Thank you. A reminder to all the participants, you may press star and one to ask a question. Next question is from the line of Ekta Suri from Z Business. Please go ahead.
Hello, am I audible?
Yes, ma'am, you are. Please go ahead.
I would actually like to ask that, is it will it be possible to throw some light if due to Sojo Infotel NCD underwriting issue did Axis Capital pay subscribers like Aditya Birla Finance and Sun TV? If yes, then how much was the amount?
We don't
Will
comment
it
on
be possible to throw some
specific
light on the same?
transactions, and we don't comment on specific transactions, the one you are referring to. So sorry, we'll not be able to add anything to what is out there in the public domain.
And also, sir, would like to understand that, as far as the home loan top-ups are concerned, is it like, banks, Axis Bank is tracking that, what's the end use of that home loan top-up? Because, if, essentially a home loan top-up is for home refurbishing or maybe, home expansion. But the banks are advertising it as personal loan usage. So how is the bank like putting it in their own books records, like, giving it a home loan as a home loan top up, personal loan, or what kind of loan, or loan against property?
So this is a top up against the home loan. So for all the customers whose account is with us, we disperse in that account and we track the movement of that. So it is for personal loan in nature. It is discretionary at the end of the customer. You can use it for house repair or other miscellaneous expenses.
So it's in your books as
We lost.
hello.
Yeah, it is treated as an unsecured loan in our books. It's a small quantum of book, but it is treated.
Okay, thank you, sir.
Thank you. Next question is from the line of Chineet Parmar from Money Control. Please go ahead.
Oh, I pressed the button by mistake. Sorry.
Thank you. As there are no further questions, I'll now hand the conference over to Mr. Puneet Sharma for closing comments.
Nirav, thank you, ladies and gentlemen, for taking the time to be with us this evening. If any questions remain unanswered, corporate communication and investor relation team would be happy to take those questions offline. Thanking all of you for your time this evening. Thank you. Have a good one.
Thank you very much. On behalf of Axis Bank, that concludes this conference. Thank you for joining us, and you may now disconnect your line. Thank you.